My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. Hey guys, David Jaffe here, and I'm here with TJ from the channel TJ The Wheel Deal. And
how are you?
I wanted to have another chat with traders because I know a lot of people think that I only do videos on like fake gurus or things like that. But I think it's really important to give legitimate people, legitimate traders who have verified results and who have a tremendous amount of experience and track record, a platform so that they can talk to you about how they've been able to accomplish their success. TJ has a great channel, TJ The Wheel Deal, as I had mentioned previously. He does a lot of live streams. He, as his channel name suggests, he does a lot of wheeling, which means like, you sell a put option, you get a sign, and you sell call options, etc. And I wanted to introduce you to TJ and also go through his background. And TJ, was there anything that I left out as far as like basic introduction before we get into your background?
No, man, it's pretty straightforward. I'm nothing special, man. I just figured something out that really works for me, and I try to share it on the channel as in the most authentic and transparent way possible. Because I had a real long talk with my wife before starting YouTube, and I was like, "Baby, I have this idea, I have this vision, but I wanted to make sure she was behind it." And she was like, "I think you're good. I think you're good. Just don't show up too much. So don't be showing account numbers and stuff because I know you don't care." And she was like, "Just there's some people out there. Not everybody's got their best, your best interests at heart, so to speak." So
yeah, that is true. I tell my wife where it only takes like one person. So yeah, that is true. But you are very open. Like you have an account where it has around like $6 million in assets, and you freely show that on the live stream. And the transparency is very refreshing.
Yeah, and then that's the genesis of my channel, and we'll get into the background in a second. But right, we're here on the channel. I created what I was looking for when I first started to do this full time. Like I was like, man, is there anybody that is just like showing their trades on a regular basis and walking me through the psychology of this whole thing? Because we can all go read a book or go watch a little 15-minute presentation from someone. I mean, you even got some on your channels, right? Like on the Wheel Strategy, little 1-minute clips or whatever, and get a very general idea on what it is. But I was like, is there anybody that I could follow on a daily basis? That way it's kind of like I'm plugging into that, to that show, that series, if you will. And I know it's probably like on like season 3 or 4, but I'm going to play catch up, and eventually I'm going to know what the hell they're talking about, know all the characters in the movie, so to speak. And then I'm going to plug and play. That's what I was looking for. I was like, hey, it's almost like going into school. The teacher says, hey, it's an open book exam and y'all can copy off each other. That's what I was looking for, but it didn't exist. So then I went on this mission to create that, and that's kind of the little community that I got going now. And granted, I'm not a financial advisor. Please don't follow me into these trades because your genetic makeup might not be the same as mine, right? But it really works, and the results are the results. That's why I love having discussions like this, because it's hard to argue with hard numbers.
Now, your drawdowns they're higher than my strategy, but you also during a bull market you outperform my strategy. Oh, yeah. Have you always had? And to be honest, I'm kind of like risk seeking. Like sometimes when I make videos about people, like that's led to me like litigating and getting sued a few times. Where thankfully I have like some close friends that have helped me out. But I'm also like kind of risk seeking in some things as well. In your past, when you were growing up, did you always have like a high risk tolerance, or was that not the case, or is it something more that you just grew accustomed to as you gained more experience in the stock market?
That's a really good question. And if I really think about it, my mom has always called me an adrenaline junkie. Like she's always called me an adrenaline junkie. And, I was like, even when we started playing Pee Wee football, my brother's like 3 years older. I was like super fast when I was a kid for whatever crazy reasons. I was really small, but I was like really, really quick. And I was like, I want to go play with them because it's boring over here. I'm scoring all the touchdowns. I know I can't be that good because I go practice with these guys and I get my butt kicked. You know what I mean? So she signed a bunch of waivers and stuff. And I'm like 6 years old playing with the 8 and 9-year-olds. And I always wanted that challenge and stuff. And it was really humbling too, because just a couple of years at those age differences, it makes a big difference, dude. Like you're a little 6-year-old bully in your class, but then you go play with the other guys and you're like, man, this is harder. So I think I've always been that way. I played varsity football as a 10th grader. My parents again had to sign a little waiver and saying, hey, over here, you could probably get your butt kicked. But I was like, I was all about it. Like I was all about it, and grew up in a real small town, but I had real big dreams, dude. And I could not wait to get out of there. I ended up at the University of Texas at Austin. I wasn't as smart as you. I was on the 5-year plan, and I still can't even believe how I got out of there with a degree, dude, because I had no interest in college. Like after a couple of years in college, David, I felt like I was wasting my time. Because I was like, what are you teaching me here? And I know that eventually I'm going to work for myself. I already know how I'm made. Like I already know my makeup mentally. And I'm like, what am I doing here? So college was very difficult for me for about 3 years.
A few quick things on that. So I was definitely like an overachiever. I was probably around like average or maybe slightly above average for my major at Cornell, but I got really good grades just because I outworked people. But after my sophomore year, I kind of realized that college was bullshit and a waste of time. Right. So I actually took community. I took some classes at my local community college over the summer. I took about like 2 or 3 classes, so like 6 or 9 credits. And then that actually allowed me to graduate and leave school early. So I got a banking offer. And I think I started like February 14th, 2014. It was like I remember it was a Monday. Maybe it was the 19th, February 19th or something like that. But it was like, but I remember I just wanted to get the hell out of college. And then you made a really excellent point regarding, competition and also like getting your butt kicked and then wanting to be competitive. I remember Michael Jordan talking about, he had an older brother who he said was actually like more athletic than him, but he was just shorter. And he said that because his brother would show him no mercy and would always beat him relentlessly, that actually spurred on like the drive and like the killer instinct and the desire to continuously overcome like falling down yet getting back up. So I think that there's something to be said about that, and being successful despite, because it really teaches you how to overcome adversity from a young age, which is very important in life.
Agreed. So a little bit about my background, guys, because obviously I'm new to your channel. I think I was on once before several months ago. I'm just a regular guy, man. I bought into the whole dream. You go to school, get a good job, work your way up the corporate ladder, and eventually you could be set for life, right? SFL, that's what I was looking for, set for life. But then I realized that was all bullshit. That is not really the way the world works anymore. So I just wanted to be, sorry, my dog went crazy. I wanted to be an entrepreneur. And a lot of that was because, full disclosure, one thing you will get from me, David, is full transparency. I committed a crime when I was 19 years old. I thought it was a good idea to let some friends go to the ranch that I grew up in to go steal some cows and take them to the auction because one of our buddies was trying to raise money for school. And they came to me with this idea to do that. I was at UT Austin, and I was like, it's a few $1,000. It's no big deal. This is a 19-year-old mind not knowing the ramifications that this was about to have on my life. But dude, we got slapped with the felony. I met face to face with the Texas Rangers. We went to court. It was just an absolute shit show for me. And I was like potentially looking at jail time and stuff. So it was a real big eye opener for me. And my parents were like, you're going to go down with them because this is absolutely stupid. You know better. You weren't raised like this, blah, blah, blah. So that tainted me very early on in life. Now, granted, there's deferred adjudication, there's expungements, all of those things that I used.
But I was just going to say that.
But it still happened, right? It still happened, and it plagued me for probably about 5 years of my life, I would say. And that's kind of what drove me in that direction of entrepreneurship, because I was like, well, I can figure out how to start a business or something, then I don't have to worry about my background, so to speak. Because it's like, it's kind of like before taxes became popular, dude. Like they look at you and there's like, hey, you ever been charged with a felony or something like that? And granted, all I had to do is I had to go do community service for a couple hundred hours or whatever as a kid, 19-year-old kid, and I was scot-free. So that's kind of what led me down this path to begin with, is I was afraid that people were going to tell me no when I was looking for a real job. I was like, I'll just create my own job and figure out a way to make money. And I did all kinds of things, man. I sold cell phones, satellites, home security, even though the dating service at one time. I'm sorry?
Were you ever turned down for a job because of the prior conviction or no?
Yes, I was. And I wasn't convicted. That's the thing.
Because
it was only a charge.
So it was like deferred or something, and then it was
deferred adjudication is what it's called. So there's no conviction, but there is a charge until you're able to get it expunged. But you have to be a good boy for like 5 years, hire the right attorneys, make the right donations, talk to the judge, do the whole campaigning, right? Kissing babies and shaking hands, right? Doing that kind of thing, and prove that you're going to be a model, upstanding citizen and contribute in a positive way to society. Because I was already on a bad road, so I got on the good road, thankfully, and I got turned down a couple of times, and it was stupid jobs. One was like selling furniture. One was working for a vacuum company, trying to sell Kirby vacuums door to door. So one branch wouldn't hire me, and the other one did, and dude, that was good. Like I learned a lot of sales skills selling Kirby. I don't know if you're familiar with these Kirby vacuum cleaners; they're really expensive. And they're like $3,000. This is in the 90s.
Wow.
You get in there and like, hey, I'm going to clean a little portion of your, you shampoo some of your carpet. And then they walk out of there with, $50 a month for the next 10 years. You know what I'm saying?
I remember when I was in high school, I wanted a summer job. And at the time, I think the minimum wage was like $5.75 or maybe $4.75. And then it bumped up to like $5.25. And someone wanted me to sell those knives where they cut a penny or something, but it was just like too much salesmanship. So I didn't do it. And then regarding your, what happened, like when you were 19, I think a lot of people, they try to compete and be like the morality police, but the reality is that your success is going to be determined by how you spend your time when no one is watching you. Right. And that's one of the main reasons why if I create a video and I think that someone has good intentions, but maybe like a few of their trades haven't worked out, I don't criticize them. It's the people who have really bad intentions who try to take advantage of other people. And maybe they have never been convicted of a crime. But when you look at some of the most successful people in the world, Mark Zuckerberg, he did something similar to the founder of Reddit, who was actually like charged by Massachusetts, and then who like self-deleted himself in like a Brooklyn apartment. His name was Aaron something, or I forgot his name, but there was a movie about him. And then also, I mean, I'm not like political or anything, but it is possible that the next president might be a convicted felon, or someone like Elon Musk. Like you can make claims that like he's done some shady things as well. So I think it's important when you evaluate people to look at the entire content of their character and look at, and I think Tupac said this as well. You don't want to judge somebody based upon an individual moment in their life. You don't want to judge someone at their worst moment. You want to look at their life in its entirety, because especially if you've been successful, you're always going to do things that people disagree with. And you don't want to compete against, because that if you've never done something wrong, then you simply haven't put forth the effort. Everyone has made mistakes. And I met someone who actually has a pretty big YouTube channel. I met him in the sauna, and when I lived in Miami at a building called Icon Brickell. And when he was 19 years old, or around that, like 19, 20, 21, he was like a low-level marijuana dealer, and like one of his friends set him up, and he sold like marijuana to like an undercover. And I remember, he didn't tell me that he got rejected from jobs, but it was difficult for him to get an apartment because they would run a background check.
Right.
And I think he did have a conviction, and he was able to gain entry into the building by actually writing like a heartfelt note to the person, to the condo owner, and saying, hey, like, this has happened, like, 12 years ago, but I've changed my life around. Here are my finances. Here's my YouTube channel. You can look at the content, etc. So yeah, I mean, everyone loves a great redemption story. So I think that's awesome. And I think that if anyone would hold that against you, what a 19-year-old kid did, like, especially because it's like non-violent and it's not really, what I mean? I'm sure
it was stupid though, bro. It was.
I'm sure people. Yeah, I'm not like.
Yeah.
But it's something that you could recover from. So thankfully you have. So so you were working in sales, it seems like, and then how did you?
I had several businesses, a lot of trial and error. It was feast or famine in those types of businesses, like the home security business and the cell phone business. It's like, you could generate $750,000 to $2 million a year in gross sales. Other years, it's like $200,000 or $300,000. And then there was a point where I had like 60 employees with my company called Soteria Security in San Antonio. And it was like, it seemed like everybody else was getting fed except for me. So it's like people like, oh, you own your own business. It's so awesome. And I'm like, I feel like I got like 20 families that I'm supporting. And
they get paid before you.
Mine.
Yeah.
And it's like, it's a lot of pressure. And that was during the time that Obama was president. And it was when they were doing the whole the healthcare deal, where they were like mandating that you needed health insurance for your employees. For a company my size, that was absolutely devastating, because it added like an extra, I think it was like $12,000 a month to our overhead.
Wow.
And I was just like, thanks, Obama. You know what I'm saying? Like, I was not a fan of that, but at the same time, I understood that if these people are going to work here, they should probably have some health insurance. So we got them the 401k. I had a SEP IRA for me as the owner of the company, and so on and so forth. So I was like, but it makes it hard for the business to thrive. So then I had no choice but to downsize the business. And I was like, okay, it's 20% of the people do 80% of the work. We all know that. So I'm like, am I really going to be that asshole that has to get rid of 80%? Because at the end of the day, they're kind of like dead weight. So I had to trim the fat, and that was a very painful experience for me. Like, I had a little team meeting with everybody, because it's like, there's a bunch of telemarketers. We sell home security over the phone. And I was just like, man, here's the thing. I can only afford to keep the people that generate the majority of the sales, because we really not going to be able to afford to keep the doors open. It's like, we analyze stocks in the market, and we're like, how much run rate do they have?
Yeah.
Well, it's a real deal. It's a real thing when you have a mom and pop operation. You only got like maybe $120,000 in the bank, and your monthly expenses are about 50. So you only got like 2.5 months of run rate if there's no money coming through the door, right? So it's tough. That's why when I look at these financials for these businesses, I've been in those shoes, granted at a much lower level, but you can't just create money out of thin air when it's a private business. At least with the public business, they have the luxury of issuing more shares, right? And doing a capital raise that way. I didn't have that luxury. I mean, I went to Bank of America several times for more lines of credit, but at some point they don't trust you, because they know that you're swimming upstream in those types of businesses.
Right.
But then I got my footing, David, in 2011. It was St. Patrick's Day, March the 17th, 2011. I started in the oil field. And it was my brother. My brother's like, hey, man, you've had really, really good years, and then you've had really, really rough years. You need stability. I had 2 kiddos at the time, and you need to make sure that they have health insurance. You always try to take care of all of these other families with all of your little projects. He called them projects. My little businesses, called them projects. He was like, you need to work on you. You need to make sure that you are financially stable. Go dedicate 10 years of your life to the oil field and go build yourself a massive 401k. Like max out the 401k, put your head down. And dude, that's exactly what I did. I took my brother's advice, and I went and I worked as a roughneck, is what it's called. I worked on an oil rig, Started as a floor hand, then I went pit hand, then I went derrick hand. Y'all can Google these terms. It's not fun work, but it's honest money and it's hard work. And I did that. And I did that from 2011 until COVID.
Wow. Okay.
And
And
that was the start of kind of generating my bankroll, if you will.
and were you saving? How are your spending habits? It seems like in 2011 you were like really focused upon, upon like bankrolling yourself. So were you able? And
My
I think
monthly expenses were under $4,000 a month, and I was making
okay.
6 figures. So it changes because I think they try to keep up with inflation. I don't know exactly how it works, but I remember the very first year because I had to be there for 90 days before I could qualify for even to participate in this program with the 401k, and the company was going to give you like 3% or something like that. Like it's called Be Invested or something, some terminology that they were using. And I think the most that you could say was like something like $12,000 a year.
Mm-hmm.
And then I remember the last year it was like 16.5 or 17.5. I don't know. Y'all can check me on these numbers. I don't know what the numbers are now. They're probably $18,000 to $20,000 a year because it tends to go up incrementally. And
Yeah,
I
based
think,
on inflation. So
yeah, I think it's to try to keep up with this inflation. And it started adding up for me, but then, and I got laid off in 2015. So I was out of the oil field for about a year, and I ran into this thing called Bitcoin. I ran into this thing. I went to a pitch. It was a little pitch session and a networking session at a place called Mashed in San Antonio. If you're ever in San Antonio, Texas, the Rim, Mashed, really, really cool place, cool little restaurant. So I went to this networking event because I also had a little wine tour business going. So I was trying to promote the business. And this guy, Fred Medrano, did a whole spiel on Bitcoin. And he handed out little CDs. And I was like, how do you play these things? You know what I'm saying? So I'm going everywhere around town. I went to this place called Bjorn's. It's an electronics store in San Antonio, Texas. And I'm like, dude, I don't even have this in my computer anymore. I didn't know that they still did this.
yeah, the CD-ROMs.
And they played it for me there at the store because I knew the general manager. And I watched this whole infomercial on Bitcoin and how to start to be part of this company called Mining Max. It was a Bitcoin mining type deal. I ended up kind of being a scam. My buddy ended up losing like 40 grand. But I was like, what do you mean it's got a ticker? Because I was already swing trading. So then I was laid off in the oil field, and I took $15,000 and day traded Bitcoin for about 7-8 months straight and profited like $50,000-$60,000.
Wow.
And just following Bitcoin, but dude, it's so exhausting because this damn ticker was trading 24/7.
Yeah.
So it's like you go to sleep on some gains, and you can wake up to some really heavy losses because this is when China's still in the picture. And then whenever China outlawed Bitcoin or whatever, then it made it a little bit easier to want to hold on to your Bitcoin overnight because this thing was like really volatile. When I first started with Bitcoin, it was probably $400 to $600, something like that. And then I think it went up to like 6,000 or 7,000, maybe a little bit more. You guys can see on the little rainbow chart thing; it'll tell you. And then I went back to the oil field, and then it tanked back down to like 2,000 or something like that. And I didn't have any Bitcoin at the time. And then I just put my head down again for another 3 or 4 years, stacking my money and then using, like at that time I had like 75,000 or so, and I was just swing trading it, like doing Apple. I did Boeing several times, and I'm talking about like $50,000, $60,000, $70,000 trades, and then I'll make my little 3%, 4%, 5%, like literally just all one trade, like YOLO, if you will, but looking for the right setup, buying the dip. And sometimes I'd have to be in that trade for like 3, 4, 5 months for it to work out. But I knew that that's what I wanted to do for a living. But I also knew that it wasn't sustainable because it's like you're always looking for the next opportunity. So I was like, okay, I want to be in the stock market. I know that I can't physically do what I'm doing forever because my body's going to give up. I'm having to climb this ladder 90 feet, pull pipe, getting real dirty. I don't want to do that. It's a lot of time away from the family. So I was like, what can I do in the stock market that is consistent And it's like, in something so volatile, is there any way to create some form of static income? Because the bills are static, right? The bills are consistent. But in the stock market, things aren't consistent if you're just day trading or trying to find your way every day, trying to figure out, okay, how do I make money today? And that's how I stumbled on the wheel strategy, David. So we can really get into it now. I know that's one of your favorite strategies as well, specifically to sell cash secured puts on very solid companies.
Before we touch upon that, I'm just curious. So it seems like you live a little bit of like an ascetic life, which means like you are like watching your expenses, and yeah, like I'm sure you have a little bit of fun, but between like 2011, up until like you had like a little blip where you got laid off, but then you went back after a year, and then the oil field work stopped around COVID, and you started having like more and more money. And especially now when you have millions in your account, has your lifestyle or your habits, have they changed significantly from where it was previously? Or is it pretty much the same? Like, you still have the same habits? Are you still pretty good about like saving, or have it changed a little bit?
I'm married to a very expensive woman. So that aspect has changed. But luckily, she comes from a wealthy family. So she doesn't really, ask me for much, but I obviously contribute as the man of the house, more than my fair share. So what's changed really for me, if I'm really, really honest, I think maybe my clothes are a little bit nicer. I've always had a nice car. That's always kind of like been my thing. Like, I've always overspent on a car, knowing damn well that it's a horrible investment, but it's just it's my vice, right? I don't drink, I don't smoke, I don't like to eat out. Like, to me, that we have these things called Whataburgers over here, and you probably don't have them over there. Hell of a hamburger, bro, for like $6. Hell of a hamburger. So, I'll do that kind of stuff. In-N-Out burgers, like a splurge, because it's a little bit more expensive. And so I don't do those types of things. I don't go out clubbing, none of the sort. So I'm just very simple. But now it's like, I have like a Ferragamo collection and a Ralph Lauren collection, if you will. So like on the clothing side, that's mostly because of my wife as well, because we go to certain restaurants now. She wants me to dress a certain way, if that makes sense. But if not, I always look like I'm going to the gym or coming from the gym. That's how I dress. Like, I don't have anybody to impress. I'm pretty secure in my own skin, if that makes sense. And then we have a nice home, nothing like super crazy. I mean, we have live in a $500,000 home. We could certainly afford a lot more than that. But it's just like, it's just us and the dog. So it's like, okay, so why are you going to overspend on something that the maintenance and the upkeep on these things it's such a joke, like financially, it's like it's a liability almost to have these houses.
And the time as well, like the property taxes, the time. I mean, yeah, like, I definitely agree. Like, even small things like using a shop vac to suck out the drains for the HVAC and changing that. And then, it's a pain in the butt.
So I'd say that things have gotten a little bit more expensive, but I mean, not to like throw all of our business out there, but if I had to, I could totally still function on under $10,000 a month. So before I used to do it at 4, and now I could do it at 10. It's a little more comfortable at 15. So I guess it's probably above average if you look at whatever the median household is. I'm not real sure what those numbers are, to be honest with you, David. But I feel like we live like upper middle class, but on paper, we're probably a little bit above that, I would say.
Understood. I guess the only thing for me, before we get into like the wheel strategy, I actually have really nice clothes, but I never wear them. And I think part of it is that I have OCD, and then I would be concerned that if I get like a $5 shirt from Walmart and it like rips or it gets stained, then I don't really care. I can just throw it out. But if I have like a $200 shirt, then I don't know. I would just feel like so guilty. But I know it's like completely irrational, because the clothes, they don't do any good for sitting in my closet and me not wearing them either. So it's just more so like a comfortability thing. But anyway, let's get into like the wheel strategy. So basically, you were looking for something that had like a little less volatility, where you can sleep at night, where you didn't have to, go through like the ups and the downs. So I'm assuming that you looked more into looking at stocks that were slightly less volatile. And then you also looked at ways where you can obtain the shares and like use options as a way to like reduce your cost basis? Or can you walk me through like how you settled on the wheel strategy and then how you specifically trade it?
It was a lot of it was dumb luck, to be honest with you, because I was just buying the dip. Like, 'cause this is when I went full time was during COVID, and it wasn't by choice. It's because we all got laid off in the oil field. Because it was like, nobody really, it was kind of, nobody knew what it was, right? So everybody freaked out, stay home, and don't touch anything, wash your hands 10 times a day, that whole deal, right? So I just started doing what I knew how to do: buy low and sell high, try to make 50, 60, $70 a trade, excuse me. And I was doing like 20, 30, 40 trades a day.
Wow. Okay.
Just trying to make, I call them Andrew Jackson trades, the $20 bill Andrew Jackson. It's like, I'm going to put on this trade and I'm going to leverage $300, $400, $500 to make 20, and I'm out of there because I don't want to study these companies long enough to see whether or not they could turn into investments. If I'm going to do it on equities, because 401k is not in single equities, right? 401ks, and you're just betting on the U.S. economy, right? Like 90% of the people in a 401k, they couldn't tell you what their money's actually invested in.
Yeah, a lot of indexing because there's a lot of restrictions on the retirement account.
Right. It's no-brainer investing, and that's how people get wealthy, by accident, right? Like on the accidental millionaires. Right?
Like, yeah, they sit on it.
They're by chance. Like they saw something and they believed in it, and it worked out, 20, 30 years later, right? That's how accidental wealth happens, and it's really cool. And I'm kind of one of those too, as far as, but I had the intention because I was maxing it out. And then a lot of mine was in the Roth as well, because I learned about some of these tax benefits because I had some really good mentors along the way. So anyway, I was just day trading, dude, and swing trading and trying to figure it out. But I started accumulating shares. I had 300 or 400 shares of a company called DraftKings. I had some shares of Tesla, Facebook, because it was Facebook at the time. It wasn't Meta. It was Facebook. And then Apple. Apple was like my guy, right? Like I was like, everything's Apple at the house, and Apple just seems like the play. It's just looking back at the mindset. I've grown a lot in the last 4 years, right? But I'm trying to take you back to where I was, like where I was.
One thing though, it seems like you had an affinity to strong brands. I mean, DraftKings in the online gaming is a really, really strong brand. I actually have I have a long-term ratio spread on DraftKings. I think the short put is at like the $20 level, which I would be happy to get assigned and own it or at about that level. But also with Apple, I mean, just this week, we're in the last week of June 2024. And I think last week it hit like a new all-time high, and currently it's trading around like the 212, 215 level. So, betting on really strong brands is a pretty good strategy.
I've seen so many Warren Buffett interviews over the years, Peter Lynch interviews over the years, because I've been enamored with this stuff since I was a kid, guys. Like I used to watch this infomercial called Optionetics as like a 7, 8, 9-year-old. And it was about options. And like 2:00 in the morning, I would watch this thing, and I was like, I would tell my dad, I want to do that for a living, but they wanted you to buy a course, and the course was expensive, dude. It was like $1,200 or $1,300, and we just didn't have the money. And plus, I'm a kid, right? So my dad's like, you really love money and you really love numbers. I think that you can do that, just not right now, mijo. Mijo is what like Mexican, the Spanish word that they use for like little son or whatever, right? And but he championed the idea. And then I raised cows growing up, so it was like my livestock or whatever. So I saw that they would appreciate in value as they grew older. But then it was heartbreaking when we take them to the damn auction, and nobody told me that they were going to go kill my cow. Yeah. So I was just like, well, I don't want to do livestock, man. I cried a lot as a kid when I realized what the hell was going on, because my dad didn't fill me in on that little detail for about 3 years.
Yeah.
And then I didn't realize that I was raising hamburgers. You follow me? So, dude, it led me to be a vegetarian for like 7 years. Because I was like, dude, I'm like murdering my little Lucy and Elsie, you know what I'm saying? I mean, like, I'm sharing stuff with you that I don't even share on my channel. Like, I mean, this literally had an impact on me, but I did see the opportunity because I was exposed to livestock. And then my dad's like, there's a thing that it's very similar to this, but it's virtual stock. It's the stock market. So my dad planted that seed when I was like about 12 years old, because I was watching this Optionetics thing, but I had no idea that it was really stock. I couldn't piece it all together. I was too young, right? So it was like, that little infomercial that you used to watch, that's all about the stock market. So I just, everywhere we go, because my parents have worked for a very wealthy family growing up, I would ask people about the stock market and see what they knew. And they were all like, oh, just mutual funds, index funds. So I started hearing this terminology at a very young age. And then my late brother, Greg Ortiz, friend of mine, brother in Christ, he's no longer with us. He was a regional vice president for this networking company called Primerica Financial Services. So I went into one of these little meetings where everybody's like getting real excited to be financial consultants, if you will. And I saw this thing to where if you put, a couple $100 a month into these investments in 30, 40 years, it grows to like $1 million. And I bought into that narrative, hook, line, and sinker. So that was my mindset going into the stock market. It wasn't a get rich quick scheme. I knew that if I did the slow and steady thing, eventually I'd win the race. But now fast forward to COVID, I'm just trying to figure it all out because I no longer have this 6-figure income coming in. So I'm playing poker full time and I'm driving Uber and Lyft full time so that I could promote my wine tour business, because I had already kicked off this wine tour business the first time I got laid off in 2015. So I'm like, let me go drive drunks around with Uber and Lyft and be like, hey, I can really get you drunk over here in one of our vans. And I would go do 20 rides. For every 20 rides I did of Uber and Lyft, I would sell a $777 wine tour.
Wow.
So
okay.
When people are like, oh, I can't believe you drive Uber and Lyft, I'm like, you make the money that I make cross-selling my wine tour business, because you guys are my target market. Y'all already value people driving their drunk ass around.
Right. So instead of using ads to actually target those people, it's like they're paying you to get into your car, and then you have a captive audience.
I was wearing my 7-7 wine tour, my cap, my jacket, my shirt. I was branded, and I even had a 777 wine tour sticker on my car. And it happened to be, it was an Audi A6, so I always had kind of a nice car. Then the BMW 428. Then I got my first Jaguar, an XJ. And when I got that XJ, I was able to sell wine tours every 7 rides, a $777 wine tour. So I was like the highest paid Uber driver in the world, bro. You know what I mean? Like, it was crazy.
You think that the car impacted, or was it just that the people were choosing?
Now, dude, as soon as they walk in, you show up, and it's about $80,000 car is what I paid for that car. And one of the first things they ask you, so what else do you do? I know you don't do this full time.
That's interesting, because like Jaguars have they used to be like good cars, but they have a reputation for being like some of the worst built parts and like always breaking down, the electronics breaking and things like that. But it's interesting.
My car was under warranty, so I didn't have any of those issues, and I always bought the extended warranty.
Okay, but it's interesting how, getting back to like the brand Jaguar carries such cachet that people were more interested in listening to what you had to say because they know that you were doing something right, where despite their perception that you're doing kind of a lower level job where you're an Uber, they were intrigued enough where it's like, wait, this guy has almost $100,000 car and he's driving me around. Like, there must be more to this. I'm interested. Tell me more.
Right. So this is going to lead me to something I don't think I've ever said on the channel, because people always ask me, well, how did you get this money? So I'm going to tell you how it happened. It happened because of Uber and Lyft and my best friend at the time, Chris De La Garza. I say at the time because my wife's my best friend now. I was already doing really well. I had already discovered selling options, playing poker. There was a guy, JJ. Let me give him a shout out. JJ changed my life. He says, dude, every time you come in here, you talk about the stock market. All you do is you show your wins. He's like, you really have a gift at doing this, but I don't know who you are in the market because I don't think you know who you are in the market. So go pick one thing in the stock market and be the best fucking guy that you could be at that one thing. Like
Right.
you want to be known as this in the market. So I went home, I got on my motorcycle, I went home, and like a tear like went down my eye because he had like slapped me around, if you will. But I was like angry but happy at the same time because for the first time in my life I had clarity. I had real direction, and it says like the tiger eye, the eye of the tiger type thing. I had a gleam in my eye.
Right.
And I got home and I started YouTubing like crazy the best strategies for making consistent income in the stock market. And that led me to covered calls. So I was like, okay, cool. What's a covered call? Because I heard about covered calls around 2008, 2009. It flew over my head, David. I was like, I don't even know what you're talking about. You know what I mean? And I don't want to learn. I'm too lazy. So then it led me to like, what's one of the best consistent profitable strategies? And Google, a Google search pulled up the covered call strategy. So I started reading it, and Google's really cool from the standpoint where it's like you click one thing and there's like a drop down and it's another one, another. I mean, I must have read like 20 or 30 of those things. And then I went over to YouTube and I'm like, let's see if anybody's talking about covered calls. And I landed on, I'll give shout outs to some people that I landed on their page. I landed on a channel called Project Finance. Mm-hmm. And he talked about covered calls because I was just Googling covered calls, right? The bald guy, pretty jacked up. I don't know his name, but he looks like he spends a lot of time in the weight room also. So he was talking about covered calls. I landed on Brad Finn's channel.
I did briefly, sorry to interrupt. I did a review on Project Finance as well, and it was very positive. So Brad Finn as well. I haven't done a review on him, but yep.
I landed on Brad Finn talking about covered calls. I landed on a real skinny Italian kid named Matt Giano or something like that. And he was talking covered calls, and he did an entire video on the wheel strategy. And I watched the video. It was like 15, 20 minutes long. And then that led me to a guy named Adam. I think it's called In the Money, his channel.
In the Money, Adam. Yeah.
And he did a very thorough thing on the wheel strategy, not just covered calls. Like I watched like 2 hours of this dude's videos.
He's very intelligent. Very intelligent.
Dude, this dude's making a lot of fucking sense. You know what I mean? So I was like, let me look to it.
Sorry to interrupt again. It's a simple strategy. So it's not something where, we're going to teach, we're not going to use like 10 million indicators and, we're not going to feed the AI algorithm that's going to trade on your behalf. It's very simple.
Right. So then I ran into one called Marcus, Coffee with Marcus or something. It's an older German white guy.
Marcus. Mm-hmm.
And he had a portfolio of $250,000. So I was like, I could relate to the dollar amount. And he had margin accounts. So it was really a $500,000 portfolio, but he was only showing his trades once a month. Mm-hmm. So that kind of like gave me a little bit of the idea for the channel that I wanted to create, because there was a guy doing it, but there was no frequency, if you will. So there was that. And then let's go back to Uber and Lyft. How did this happen? How did my bankroll really happen, right? So this is like you're getting the exclusive here right now. My buddy Chris told me, fuck your wine tour business. When people ask you what you do, tell them you sell options for a living. And you're going to go find some clients. I'm like, what do you mean clients? He was like, dude, there's people, because I was already making money, David. Like I had already figured out how to make $3,000, $4,000, $5,000 a week doing this thing, because I had learned. I mean, I went down this rabbit hole and I didn't pick my head up for about.
And you were passionate as well.
Like I was like, I mean, I could work 87 and a half hours in the oil field. I'm gonna work 87 and a half hours for me.
Right. Exactly.
Screw them. I'm gonna work for me. So, dude, I must have gotten probably 5 years of knowledge in about six months of just treating it like the oil field and like just putting in the time, right? Like you can learn a lot quickly if you're dedicated.
But real quick on that. So this is very, very interesting because you made a comment earlier where you said that you were on like the 5-year plan in college and you didn't really apply yourself in school. I think it's extremely interesting how finding what you're passionate about, and one of the most important things that you can instill in children or really in anyone is just to have a really good work ethic. Because even if you're not super passionate about getting good grades in school, as long as you avoid self-destructive tendencies like drinking or gambling or doing drugs, and you also have a good work ethic, you don't necessarily have to be the brightest. Like in school, people compete about, getting A's and things like that. As long as you avoid self-destructive tendencies and you work hard, you will be successful. Or at least there's an extremely high probability that you'll be successful.
Right. Agreed. Because it's like whenever you're passionate, it doesn't feel like work.
Right.
So it's like the time, like, the wife has to peel me away from this little office space that we have for this spare bedroom that I use. Like she'll like stick her pretty little face in and be like, "You coming to bed?" You know what I'm saying?
It's like, all right, babe, give me like 20 minutes. I just got to finish this up real quick.
My wife loves when there's like a day off during the week of the stock market.
Yeah, when there's like a holiday or something, right?
Yeah, and it happens pretty frequently. It seems like every 5 or 6 weeks there's something, right? But she prefers when it's the Monday or the Friday because then that's long weekend time for us.
Mm-hmm.
And she's made me just leave the laptop, leave whatever, leave the phones. Like this is us time. You can, I know you already. You can study this shit 45 minutes before the market opens on Monday. You can get your game plan going for the week. Because I used to exaggerate how much time it would take, right, with her. But back on track.
So so they told you, okay, you make money from selling options. So now you were driving Uber and Lyft and you were telling people that you're a successful options trader, which is accurate since you were making, on average, like $2,000 to $5,000 a week. So then how did that?
My account was up 333% for the year, my year to date. So I was showing my Robinhood account to the passengers.
And what was like the one or two stocks that was it like Tesla? What were some, because I assume
I'm gonna give a shout out to Matt from Matt Money. I think Matt Money something. This is a little skinny Italian kid. I don't know if you've run into him or not. He was doing a challenge where he was trying to become a millionaire with Riot and Marathon, the Bitcoin miners.
Okay. Yep.
And he was doing daily tapes. And I followed him into these trades. He doesn't know me from Adam. I've never emailed him or anything. At some point, I want to do a podcast with him just to thank him because he has no idea, right? So I literally copied him on Riot and Marathon, not really understanding too much what was going on. But dude, that tripled my account in probably like about 10 or 11 weeks.
Wow.
Just following his trades.
Now, I know that we're getting a little bit more advanced as far as like actual trading, but I would assume if a stock's going to go up that much in like 10 or 11 weeks, there must have been a lot of call premium when you were selling pretty far out of the money, because if not, then the call options your shares would have gotten called away.
He was selling in the money puts as well.
Okay.
So he was protecting himself, because on a bull run, you don't really just want to be selling covered calls because you can really underperform the market, right?
Right.
So, and especially in these stocks, dude, when Marathon was going to like $70, $80, Riot went to like $50, $60 or whatever it was. I mean, roll the tape. This is like in 2020, 2021 when this is going on. You can go see those price charts later.
So he was doing, primarily, he was also selling in the money puts. And because the implied volatility on those stocks was extremely high, he was collecting.
10%. He was averaging between 7 and 10% in premium per week.
Right, and so he was collecting a shitload of premium because it was in the money, and then the stock would appreciate in value, therefore leaving the in the money puts to be out of the money at the end of expiration, or he would close them out early. Is that correct?
Yeah.
Okay.
It was insane, dude. So I must have copied and they weren't exactly copied, but because he was recorded, he wasn't live, right?
Mm-hmm.
But I had already caught on enough to know what was going on, right? Because I had caught up to season 6, if you will, in the movie, in the series, if you will, just use like Netflix as an example. So I already knew what time it was, if that made sense. I didn't know that you could do that on a stock like the miners, because I was familiar with Bitcoin. He's the one that exposed me to the miners on his channel.
Yep.
So anyway, dude, so I'm over there flaunting my 333% return, annual return to the passengers. And then I'm like, okay, so why am I doing this? And then Chris had a plan. It's like, now I want you to start telling customers that you'd be willing to coach them for an entire year if they will give you $500. And I want you to come back and tell me how many people it takes for you to get a yes. So, dude, it was crazy, David. Like, I'm going to give you a number right now, and it's insane, okay? So in about a 4-month period, I had over 400 people give me $500 to be their coach for 1 year.
How did you handle the time demands, though?
And I was like, here's the thing. This was a handshake agreement. It's a little bit vulgar, right? But this was my close. I'm going to show you how to do this. I have a Facebook page. I had created a channel, so everybody would go there. I post all my trades on there. You'll be able to text me only during market hours, because you know what I'm doing. When it's not market hours, I'm over here and I'm playing poker, because I need cash flow, because I'm trying to get the portfolio to grow.
Right.
I don't want to live off of this account yet, because I'm robbing from myself, so to speak. And I'm going to be your bitch for a year. And after that, I need you to forget that I exist. But I'm going to create a YouTube channel.
Right, and follow me there.
Find me on there. So a lot of guilt was setting in my head. And I was like, I need to make sure that I have the content out there, because a lot of people gave me money, and it's kind of like a gym membership. I don't know if they're still using it, type of thing, right? But dude, that a couple $100,000 went a long way. And then it led me to something bigger. I started Googling how to become a hedge fund manager. Like, what does it take? And David, you're a smart guy. Do you know that there's not really a lot of qualifications to manage private equity when you're dealing with accredited investors? Right. I had no idea that it was,
especially if you stay under, I think what's it, like $50 million of assets under management, then like the restrictions are like very, very lax, right?
Yeah, under the radar. Like 20 is very, very safe. Even under 100 is very, very safe. So I had experience working for a venture capital firm in Culver City, California. So I was familiar with private placement memorandums, Regulation D 406 offerings, whereby you can get either 100 investors or $5 million, whichever came first. Mm-hmm. So I put together a private placement memorandum, and I went after investors to raise $5 million. And eventually I got 5 people to give me $1 million.
Just out of curiosity, because putting together a private placement memorandum or like a PPM.
There was a company in Houston that took me to the finish line, cost me $10,000.
Yeah, I was going to say, because that's something that like I would put together as an investment banker when doing a private placement deal. That's like this, guys. You have like the overview, the risks, the financial model. Yeah. You know, you have to go through like all the disclosures. I mean, that's no joke. It could be like, even for a small $5 million raise, I mean, small is like relative, but like even for like a $5 million raise, that thing can probably be like 30 to 50 pages. You have a section about you to make sure you have disclosures, everything. I mean, so yeah, okay. So you put together a PPM. I don't know what the terms were. I assume was it equity or was it debt?
Equity.
Okay. And then
I did a waterfall strategy for my compensation.
Okay.
I got a percentage of the capital raise. So that was like money, like literally in my pocket just for putting the money together, which I thought was crazy. I couldn't even believe they were agreeing to it, but I had already seen it play out before, because I had read all the paperwork when I worked for Can-Am Capital in Culver City, California. Dude, a lot of investors to play in these spaces, they'll give you like $1 million and they're like, you can keep 20, 30,000 for you. I don't even give a shit. I want in. Because these people with crazy amounts of money, they have totally different mindsets, David. It's really, really weird.
Also, what they do is they diversify. So if you're worth like $100 million, if you give like $100,000, $200,000, you might meet with this person, you might like their energy and believe in the person. You might give them $100,000 for a year, and then if they do well, you'll give them $500,000 the next time because you'll build up trust. How did you so you have the PPM document. How did you then find people to invest? I assume, were you only targeting like accredited investors? Like, how were you finding people? Was it friends and family? Like, how did it work out?
I started pitching the idea to my Uber passengers.
Okay.
And I started pitching the idea to my 777 wine tour passengers.
Okay.
That's the name of the business, 777 wine tours, 777 wine tours. And probably 50, 60 pitches and nothing. And a little bit disheartening, right? Because I'm like, oh, dude, well, maybe these results aren't big enough for them because the quantity wasn't big enough.
But did you have a minimum investment threshold that you were asking them for, or not really in the beginning?
So it's 100 people or 5 million, whichever comes first. So the minimum investment was $50,000.
Okay, understood.
You know, because it's either or, right? Like the way, at least the way that mine was structured, is you're going to get to 100 investors, and wherever you end up is where you end up, and you cannot exceed $5 million. So if you get 100 investors to give you 1,000, well, you don't really have a whole lot of money. So,
and that's the law in Texas, correct? Because I think in Florida, it's like you can actually manage money without any certifications up to like 15 people or something. And I don't remember what the monetary amount was, but I think to me, it seems like Texas is more, it's more open when it comes to that than even Florida. And I know Florida and Texas are like pretty similar when it comes to like business regulation.
It's actually very lenient, but
yeah.
I was struggling. So I did some stuff that wasn't probably the smartest thing. I entered into some handshake agreements with people. Mm-hmm. And that I trusted along the way. Because remember, I had 400 people give me $500. So after they're seeing all your trades and they make a shitload of money, it's like a relationship, right? It goes to other levels. So then I had a couple of people just give me their phone and they're like, I'll give you a percentage of how much money you'll make on this account. Obviously, they're in charge of everything. I'm like, I feel like we're breaking like 10 laws right now. You know what I mean? And they're like, I ain't telling if you ain't telling. So that may or may not have happened. You follow me? So I did that kind of, because I'm trying to build my bankroll, because I already knew that if I could show some legitimate returns, I could go after some really, really big money, and my net worth, because
and this was still in 2021, or are we now in like 2022?
No, still 2021.
Okay.
21, because I wrapped all of that up during COVID was still going on, did rampant. Like it was.
So that's good. You move fast, which is very good. Speed is important.
I saw an opportunity, and I knew enough about the market that it wasn't going to stay at those levels very, very long. And I'm not talking about, because it was like a V-shaped recovery. I'm not talking about that. I'm talking about the volatility.
Right. Yeah, VIX was still really in 2021.
It brought a lagging volatility effect with it that I feel like we're kind of still in, to be honest with you.
Right. Yeah, VIX was still really high.
Movements, dude. And if you look at pre-COVID, David, the Dow and the S&P didn't move that much on a daily basis before COVID.
Yeah.
And now you have companies like NVIDIA trading like penny stocks.
Mm-hmm.
I mean, that's people don't even realize the market that we're really in, dude.
Although right now, I do get the impression that we're in like a pre-COVID level with volatility so low. I mean, VIX has hit like the 12 level, which is something that I really didn't see, when post-COVID, VIX hit a high of like 84. And then for the next year or so, it was trading in trading above 20. But yeah, I mean, it is what it is. It'll eventually correct. So let's
So just to fast forward, I get the 5 million together. And then a double happens, and then another double happens, and now I'm actually on the verge of dissolving the fund. And
because now
pretty handsomely along the way.
So you doubled and doubled, so you grew it to about 20, and then now you're at a level that you're no longer accepting outsider money because you don't necessarily want the time restraints, and your bankroll for your personal bankroll is large enough where you feel like you can just do it yourself and focus on YouTube, right?
No, it's even more than that. It's because of what I married into with my wife and everything. So there's like a
Okay.
little family office trust going on
Okay, understood.
that I'm in charge of as well. So
Okay.
so essentially that easily replaces what I was making with the hedge fund. So it's just like now I just have the best job in the world, married to the most beautiful woman that I've ever seen. I got the best job. I mean, it's just, it all just really works out for me. And then I'm able to connect with people on YouTube as well. And the reason I started YouTube was those reasons, right? Because I had taken money from 400 people. So I want to make sure that I continue to give them value. That's first and foremost.
Right.
But then the other reason was, it was like an epiphany, if you will, David. I'm sitting there at night and I'm just like, how can I keep up with all of these stocks and all of these positions? I need a network. I need like a virtual brokerage, if you will. So I need to go connect with like-minded YouTubers or people from the chat so that we can ping information back and forth. Because one thing I realized early on in this game is we're in the information game.
Yeah.
Like we are in the information game, and now I have access to this kid Amit that I do a podcast with every Friday on his channel. He's got like 38 or 39,000 subscribers, and we do an options deal on his every Friday. There's this guy Tevis that covers SoFi Weekly. This guy Carlos, he had the Finance Junkies podcast going. So I have like a handful of YouTubers that I can lean on for information, and they can lean on me. And then I feel like I become friends with like legitimately with like 10 of my subscribers.
Yeah, YouTube
It's
is
like now I have
amazing.
like this virtual brokerage that's crowdsourced, if you will. We don't pay each other any money, but we gladly help each other out. And that's helped me to become TJ the Wheel Deal, if that makes sense.
Yeah, it definitely does. So I have around like another
How am I
20,
doing? Are you
20 minutes.
getting a lot more information than you thought you would get?
A lot, yeah. So in the next 20 minutes or so, can we go over like the wheel strategy that you like to employ? And then maybe we can even talk about like ratio spreads for like 5 minutes or so. So maybe for like the next 15 minutes, can we talk about like what type of stocks you tend to target, what you do when the position is challenged, maybe also like what you do if the position is assigned to you and then it continues to go down, like whether you sell more aggressive call options, whether you sell some additional put options in order to lower the basis, things like that. Let's start with like the type of stocks that you like to wheel and that you like to target.
I definitely have an affinity for growth.
Mm-hmm.
Because I need the volatility to be there for the premiums to be there, because premiums, David, can be your magical eraser, as you won't know, because it's real hard to pick an ideal entry point. I mean, it's easy to pick an ideal entry point. It's hard for Mr. Market to cooperate with your ideal entry point, right? Like if you see the setup, you see the moving averages, the technicals are lining up, the RSI saying it's a little oversold. It's on the lower end of the Bollinger Bands. You're like, you feel real good here. I'm going to sell a Cascade, but and then it cuts through it like butter. You know what I'm saying? Yeah. like a knife through butter. So that doesn't really hold up all the time. So there's a couple of things. I look for growth. I have the rule of 500. I need to make sure that I can afford at least 500 of those shares, but I'm not going to sell all 5 contracts right here. I'm always anticipating that it's going to go lower from where I first enter, because whenever I was swing trading, it seemed like every time I bought shares, they would go down first more before I would buy the dip that keeps dipping, right? Mm-hmm. And then I would have to like average down a little lower than where I initially bought Boeing, if you will.
But then it would go up.
Because I was in Boeing for like 6 months one time before it finally swung in my direction during COVID, because it really got its ass kicked, right? Planes were falling out of the sky. Remember that whole deal?
I remember with the 737 MAX. But I mean, Boeing during COVID, it actually fell down to around $90 or something. Right. But it fell from a high of around 344, I believe.
Yeah.
And the problem with that is, if you were buying it at 200, you would think that you got a great deal. And Now I think Boeing was up like $4 today or something. It's trading around like the 180 level. But I mean, look, if it traded at 200, if you were shorted at 200, you could have reduced the basis over like the next year so that your cost basis on the shares would have been around like 150 or 160, depending upon how aggressive you wanted to be. So it wouldn't have been the worst. But sorry to interrupt. So you were looking at like Boeing and what else?
This is like obviously back then, but like right now, like what's in my portfolio is like Enphase, SoFi, PayPal, Riot, Palantir. What I could do, David, to make it easier for you is
share the screen.
Yeah. So this is what we have going on in the portfolio right now. And I'll just go to stocks. So we have Enphase, we have SoFi, and these are substantial positions, guys. Enphase, SoFi, Palantir, Tesla. This is all set up on equity from largest to smallest. Tesla, PayPal, Riot, Neo, Intel, Nvidia, Opendoor, and Path. All of this right here on the bottom, with the exception of Opendoor, this is a project that I'm doing with Amit. He's helping me wheel 500,000 of these dollars.
Okay.
On his channel. Just so I'm saying, like, Nvidia was not my idea, Intel was not my idea, Path was my idea, but Amit liked the idea, and then Opendoor was my idea. So just full disclosure all the way around, right? So the reason I pick these types of stocks is I have a couple of hard rules. One is, first and foremost, we can go this way for now, is from a valuation perspective and from a share price perspective, I need to legitimately believe that there's a double within the next 3 to 5 years, just on the buy, hold, and hope strategy alone. Why is that important? Because if I'm not doubling in 3 to 5 years, I might as well just be in an index fund, because that's going to happen per the rule of 72 every 6 years.
Right.
So I'm like, why am I going to struggle when I could just go do no-brainer investing? Let's go look at the last 100 years of data to substantiate that claim, right? Because if you look at compounding and getting about 10% a year, I mean, it's kind of no-brainer stuff to just go buy the VU or the SPY or the SPX, whatever your flavor is, buy the Qs. I don't care. You're doing the IWM or whatever, the resties, like you're probably not doing so high, which is for the last handful of years, total underperformer. So I'm looking for something that is at levels that I want to own the shares right here, right now. That way I can sell very aggressive cash secured puts and maximize my premium. And I need to be able to legitimately see that double within 3 to 5 years. And then I also have to look a little bit at the fundamentals. I don't look at the fundamentals as much as people think, because I feel like the market's pretty smart. All that shit's kind of like already priced in. So It's like, how much time do you really want to waste? Like, I don't like to research the research, if that makes sense, right? I mean, you're kidding yourself when you think you're really going to go find a bunch of stuff that other genius minds haven't already seen.
I 100%. I actually released a video about that as well. Like, I don't even look. Right. I completely agree with you.
Like, dude, what am I going to go find about Tesla, bro? Like, what is TJ the Wheel Deal going to put on my little thinking hat on? I got the Wheel Deal Academy emblem on the back. Let's go to school. You went to Cornell. I went to UT. We're going to go find something about Tesla that somebody didn't know.
That no one else knows about. Right. And then wait for the market to validate our thoughts. Right. Yeah. I agree.
Shit. You're wasting time. You're bored. You feel like the more you study, the more money you'll make. And unfortunately, Mr. Market doesn't always work that way. So I'm looking for something that I want to own, like right here, right now, so I can sell some very aggressive cash secured puts. But then the biggest part of my strategy is my temperament and managing my bankroll and anticipating that this entry point, even though I think it's good, the market's going to tell me that there's a much better entry point coming, because you're about to lose 20% on this investment. So make sure that you have your real money ready to go whenever the real dip happens, because I'm kind of early on the trigger fingers as far as wanting to own shares. And I know that you're not a fan of owning too many shares, because it is kind of capital inefficient, if you will. So I like to strangle stocks. People say, yes, the wheel strategy, but really what I like to run is a covered strangle. And I'll show you guys examples here. Dave, if you want to talk them through it, if you want to give them a real quickie on the covered strangle before I get into that.
Yeah. So basically, a covered strangle is when you're long shares and then you sell the call option, and then you also sell some additional put options as well.
Exactly. So here we have SoFi. So we can is it okay if we just stay on here? Because we can
Let's do it.
go just about all the examples here. Fair enough?
Yep.
So here there's a crap load of shares there that we're underwater on. You'll see the average cost there. So you'll see that, we're down a house in Texas. And then there's 8 open strategies. You'll see the amount of collateral. Whenever there's cash collateral there, David, as you won't know, that's how much money I have tied up in cash secured puts down the road.
Mm-hmm.
And then when you see stock collateral of 160,000, and then this is the amount of shares owned, it tells you that just about everything's for sale on the covered calls, right? So now let's go through them. So you're going to see a lot of contracts at 650 expiring in a couple of weeks, cash secured puts, and then I also have covered calls for sale at $7 and at 750 for 8 too. And then in the distance, I also have some leap puts that I sold. I call them backstop trades. And I sold 400 at 8 and 400 at 7, collected a crap load of premiums there. And then I'm also hedging my covered calls by buying some long calls over here. I bought 200 at 10 for January of 26, 200 at 7, and 200 at 5. And I'm also running the poor man cover call campaign against these long calls that I bought as well. So, I mean, this is more than a strangle. This is like a python or an anaconda wrapping around its kill. I am trying to manufacture the win on SoFi, but at the same time, I have to manage my emotions and I have to be prepared to double and potentially triple down if this thing were to go to the $5 range, closer to the book value, if you will. So
wow.
There's that.
Thank God you're not. You're selling hundreds of contracts, and I thought that my commission with E-Trade at 10 cents a contract was low, but now I know why you're using Robinhood, because they don't charge you commissions.
Well, I think it's 3 cents a contract now.
Oh, okay. So they do charge a small amount. All right.
Yeah. It adds up, though. I mean, it adds up when you're dealing with these amounts of contracts.
Yeah.
So, because we're working a deal right now with Charles Schwab, but the lowest that we've gotten them so far is 35 cents. And it's just, dude, the math doesn't math, but they're like, well, you're going to be able to collect interest, even though you're using margin and all this other stuff. You
might want to look in E-Trade, because I got 10 cents a contract with, and they don't charge you anything to close it out when it's trading below 10 cents a contract. And I've been very happy with E-Trade. So,
yeah, dude, I'll definitely have a look. But essentially, guys, this is the coverage strangle on steroids, if you will, with a little bit of I call it a coverage strangle with a wraparound to protect my covered calls. Because we all know that with covered calls, you're theoretically capping your upside, because I'm not able to participate in any more capital appreciation above 7 and 750 on these contracts, on these cash secured puts. It's self-explanatory, David. I'm contractually obligated to buy these shares at $6.50, regardless of whether or not SoFi is trading at $4.50. Those are the gimmies and the gotchas. The gimmies, they give you a lot of premium up front. The gotchas don't go quite a mom. If this thing's trading at $3 or $4, you need to know what it is that you signed up for. Conversely, on the covered calls, don't be crying to mom and dad if SoFi's trading at $9 or $10 and you're over here selling at $7 and $7.50 because you got paid a lot of money to enter into these agreements. And then
what's SoFi trading at now?
$6.55. So slightly less money. Yeah.
So you sold the $8 and you picked up what, like $1.94 of premium for that, or is that the current price, or that's the amount of premium that you collected? That's probably the current price, right?
This is the current price of the option.
Yeah, the current price, right? How much premium? So you have 400, and that expires. What was it? January of 2025, I think.
Yeah, it's right here. So you'll see the average credit was 200.
Okay, so
contract.
So you actually picked up a decent amount of credit there. That's pretty good.
Yeah, the break even is 589. So
okay.
I like it. And then the other one, the $5 ones are actually even, or the $7 ones are actually even in much better shape as well.
And what was SoFi? Did you sell that as an in the money put option, or was it slightly out of the money?
No, it was in the money. I saw. So is that called synthetic long? Is that technically what you guys like to use? Yeah, so I sold them in the money because I want to indirectly participate in capital appreciation without owning the shares right now.
Right,
Because
right.
I just, if I sell them at like $6, there's not a lot of juice in that lemon. So
Hmm.
I didn't want to do that. And I just feel like also, since I have the long calls that I bought as well, and I'm selling calls against those, I kind of wanted to put SoFi in a situation where it has to perform. If not, I really have to, it's time to evaluate the thesis because I'm going on 3 years in this investment.
So real quick, as far as like the ratio spreads, you actually could use the ratio spread, and basically the way that I use the ratio spreads on the bullish, for the bullish call spread, it's basically the same thing as an in the money put spread. What you could do is, let's say with SoFi, you could buy like a $7 put, or rather a $7 call, and then you can sell like a $9 or a $10 call, and then that would cost you money because you'd have to pay the premium. But then you can finance that by selling out of the money put options in order to structure that trade so that you'll yield a net credit. And alternative, so basically you're buying a bullish call spread and then you're financing it by selling out of the money put options. And you're using the credit from the put options or the premium that you're collecting from the put options to pay for your call spread. Alternatively, if you wanted to collect more money up front, instead of buying a $7 call and selling a $9 call, what you could do is you could sell an in the money put option where you would sell a $9 put and then you can buy a $7 put, and then you can also sell your out of the money puts, or you could sell your out of the money calls, and by doing this you'll be able to collect a significant amount of money. So basically it's a similar structure. The benefit of this is it allows you to participate in the upside of the stock. So the best time to put on a ratio spread is, let's say with NVIDIA. I know that it's gone up tremendously, but I think it hit a high of around 140 and like 70 cents, like around there, like last week. But then it hit a low in like over the past 2 or 3 days. Like after it hit its high, it fell close to 20%. It hit a relative low of around 117. So let's say you felt that NVIDIA falling around 18% in 2 or 3 days is too much the market overreacted.
Right.
You could then buy like a 125 call option, sell a 130 or 135, and then finance that call spread by selling like a 110 or even a 115 put option, a few of those if you wanted to be more aggressive. And then in your case, because you like taking ownership of stock, and I'm not against taking ownership of stock. One of the primary reasons why my small account is actually, it grew to be like a larger account, is because I was long shares of Amazon, which in 2023 yielded over 100% return.
Right.
So yeah, like with selling call options and selling some additional puts, that Amazon position yielded over 100% last year. But yeah, using like ratio spreads is a great way in order to profit from the directional, from like the either bullish or bearish moves in a stock. Because the problem is like I used to be primarily like a premium collector, but the problem is, even if you sell premium that are out of the money, you're gonna underperform during a raging bull market like we've had over the past year and a half. You just simply can't collect enough premium, especially when volatility falls below 20, in order to outperform a raging bull market.
Agreed. And that's why I'm such a fan. Of owning shares, because I've said on the channel a lot, during a bull market, if you're in the right situations with the right stocks, the premiums are the crumbs, but the loaf is the capital appreciation.
Right.
And but it's tough to own shares for long periods of time when they're not going up and to the right, because you're not seeing those paper gains, right? People are addicted to paper gains. So what keeps me in the game long enough is the premiums that are collected. So I got to run, David, but I want to end on this note right here. You know, there's this argument about dead money, right? Because I want to come on your podcast again, and I want to have that discussion about what exactly is dead money, so that you can help me to define it. Because I have an asset here that is not doing so hot, right? We can all agree that being down 15% is no bueno. Fair enough?
Mm-hmm.
Like that, to me, that's not even argumentative, right? but because my adjusted cost basis is like in the $5 range in this particular account, collectively in the entire position, it's like in the fours now, because I've been at this for a while with SoFi. I recently sold covered calls that expire above my adjusted cost basis, below my average cost. So there's a distinction there. It's below this number, which is 774, but it's way above the number whenever I factor in all the premiums collected throughout the course of the last couple, 2 or 3 years.
I mean, that's great. You're collecting a shitload of premium, and those shares are basically going to get called away from you, where it's going to, where you're basically, so it's going to reduce the number of shares that you have.
Yeah. So if you look at that premium collected, this is at $7.
Mm-hmm.
And then if we go over here to the 750s, 1,500 of those contracts, you'll see that it yielded another 33. So it was $49,500 in premium for about a 35, 40-day trade.
That's amazing.
So I'm like, where are you going to go buy a house or a building or whatever you want to call it for $7.74 times 170,000? So call it 1.3. And it's going to yield you about $50,000 every 40 days.
Right. You're essentially manufacturing your own dividends. It's like a synthetic dividend payment.
Exactly. So I'm like, and then if I just get $1 of capital appreciation, I'm just about even on the actual shares when you look at the average cost. And dude, $1 for SoFi could be a Tuesday night. You know what I'm saying? So,
right.
I mean, granted, it could go $1 the other way too, just full disclosure, but just to be fair. But that's why I'm also a fan. If you have a pretty solid entry point on a company that you believe in, I mean, dude, if this thing goes up $5 and I don't have my hand caught with my hand in the cookie jar, I mean, that's life altering money right there. And
I agree.
And that's the thing. And I feel like the upside is more likely than the downside from here because of, SoFi's going on their third quarter of GAAP profitability, et cetera. Like they took student loans away from them when that used to be their top product. And now it's like they've just revamped and pivot like an episode of Friends with the Couch. And it's just been a way for me to manufacture a lot of premium. The capital appreciation would be a real nice cherry on top. I mean, if I can hold on to these shares to like 12 to 15 bucks, my goodness. But I positioned myself for that. And then worst case, I have to dump the shares here at some point. It is what it is. I didn't get the capital appreciation, but nobody's going to take away all that premium I've collected throughout the years either. So
I agree.
The gimmies and the gotchas. I got to run. David, my man, I could do this all night with you. It's an absolute pleasure talking with you, but I got to go pick up my wife's dinner. The restaurant's going to close here in 20 minutes. But any last words? And then let's definitely do this again if you're interested.
Yeah, definitely. Let's do it again. I'll link your channel in the description. Thank you so much for the chat as far as we're talking about like how you grew to be TJ the Wheel Deal and some of your personal experiences. I think that was amazing. And yeah, I'm positive that everyone's going to enjoy this, and then we'll do it again.
Appreciate you, my man. TJ the Wheel Deal signing off with David Jaffe from Best Stocks Strategy. As always, blue skies, green stocks. Appreciate you, my man.
Visit beststockstrategy.com and submit your email address to receive valuable free training.
please give this podcast a positive rating and a review. If you have any questions, visit beststockstrategy.com and send me a message.